Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook.
My name is Marcus Ogden, the owner of Ogden Ventures, LLC, a speaking, coaching, consulting business that helps real estate investors rise and elevate to the next level. We are a proud sponsor of the Passive Investors Playbook, a show that helps individuals learn about real estate investing, knowledge to help them gain wealth in investing in real estate to grow their portfolio. To contact Ogden Ventures LLC, go to our website, www.marcus.ogden.com, or email us at marcus@marcusogden.com. Get in touch with us today. We'd love to speak with you. And again, we are a proud sponsor of the Passive Investors Playbook Show, a show that helps people understand and gain knowledge around real estate investing.
All right, we are back with another episode. Thank you so much for tuning in today. My name is Charlie Hardage, and I'm the host of the Passive Investors Playbook. Our show is focused on people that were successful in their careers prior to getting into real estate. Today, I have the pleasure and honor of speaking with Jason Brown. Jason Brown is the founder and managing partner of PGP Advisory, a business brokerage of mergers and acquisitions advisory firm based in San Antonio, Texas. He is a dynamic business leader, M&A transaction professional, and entrepreneur with over 20 years of experience that he pours into helping business owners successfully navigate the business sale process, including business valuation, exit strategy, real estate, and transaction management. Jason is a licensed real estate agent in Texas and Georgia with an MBA from the University of Michigan, Ross School of Business. His bachelor's is from Northwestern University in mechanical engineering. He resides in San Antonio, Texas with his amazing wife and two sons, ages 8 and 10. In his free time, Jason serves on the board of the Michigan-based nonprofit and enjoys playing basketball, tinkering with home automation, biking, and coaching his son's running club. Jason, thank you so much for being here today. I'm really excited to have you. Can you tell the audience a little bit more about yourself?
Sure. Charlie, first, I'd like to say thank you for the opportunity to be here with you and the audience. I am a merger acquisitions professional. So fancy way of saying I help people buy and sell businesses. And as you identified in the bio, I've got a real estate license, which allows me to help people sell businesses that have real estate associated to them. So we'll get into that later. But I spent a long career in corporate, and I went back, got an MBA, and started doing deals. And so I really enjoy doing the deal work and helping get deals done for good people. And so I've been doing that for the past 8 years through the brokerage.
That's amazing. And I know, so we had talked about a month ago or so, and what I thought was really fascinating about you, Jason. Well, first off, the M&A side, that's very fascinating to me in general, because I know nothing about it. But what was really cool is not only are you valuing the business and how that works, but then there's obviously the real estate component in some of these. And so I'd love to get into that. But how did you get into M&A?
Sure. So I worked in a corporate mergers and acquisitions department, surprise, surprise, and learned how to do deals within the big corporation, right? So very low risk environment, very intense environment, and lots of learning. So I spent 3 or 4 years working in mergers and acquisitions, doing deals all around the world,
Sure.
doing complex joint venture deals, and learning from those individuals that had had many decades of experience. And so it's been great to be able to take all that I learned in looking at those large deals and bringing them what I would call down market into Main Street deals, and really helping individuals and small businesses, small portfolio managers improve their portfolio through doing deals. But I learned all of this in corporate. A lot of what I learned was in corporate mergers and acquisitions.
Very cool. So, okay, you had the corporate background with M&A. Why, and then you got your real estate license just because you kind of needed that, or it helped you in the M&A space?
Yeah, so in many states, in order to do a deal that has real estate associated with it, you have to have a real estate license.
Okay.
It just opens up the world, right? It removes the constraints of the deals that you can do by getting the license. And so secured the license here in Texas, actually working on a deal right now that's a combination of real estate and a business asset. And so to do that and be able to provide a level of service to the clients, I went on and got the real estate license. And maybe it's helpful to step back, Charlie. So my philosophy is ultimately we're trying to figure out how do you get a portfolio of assets, right, that generates income. Those assets could be business assets, they could be real estate assets. With our audience here, it's probably tied a lot more to real estate. And through that portfolio, we're all looking to figure out how we can get more time. How can we best leverage our time, invest in the portfolio, and have the portfolio deliver back the income that we need. And so I'm in that same boat, right? My goal is using this as a platform to create value, but ultimately reinvesting that back into whether it be real estate assets. I've owned real estate over the years. I made my first real estate investment in a single family rental almost 20 years ago. The goal is to build that portfolio of assets that have both real estate and business. And I think the two are really closely intertwined. And I think it's important to have both of those pieces, in particular, because we bring a unique skill set. So many of us that have come from a background doing something else have the ability to add a lot of value through a business. And so I think that's something that we can explore some more, but it's worth noting that combination is part of the reason that I do have the real estate license, is because investment in an asset that has both real estate and a business can be a really powerful part of one's portfolio.
Yeah, I love that. There's a lot of similarities, correlations, I think, between, and what the way you described it, I love that, Jason. You said an income generating portfolio. And I think that's all what we're kind of, looking for, right? Where some of us like single family, some of them like apartments or self-storage. You actually like the business side, which is very cool and quite new to me, and maybe a lot of the audience. But okay, so you've been in the corporate M&A space. Now you have your own firm doing pretty much the same thing that you were doing before. Is that correct?
So I do. It's actually the opposite side. So
okay.
My role is very much like a real estate agent's role in the deal. Most of the time, I represent a seller. Yeah. And so someone comes to me. They've worked in their business for X number of years. They're ready to figure out what's next. Really to monetize the asset, right? And so they come to me and say, Jason, can you help me figure out what to do with this business? And so I work to prepare that business to get sold. And I work on the valuation, the marketing materials, working to find buyers. But part of it is laying out a vision for what the business can be and helping a buyer see the potential. And it's a little bit of a matchmaking piece from there. And so that's where I think business brokerage, M&A advisory will deviate a little bit from real estate, where as people, we are very individualistic. Businesses are very unique. Yeah. And so identifying the right buyer for the right business is a bit of science and a bit of art that I help our sellers navigate to be able to get the business sold. So most of the time I'm a sell side representative, helping to get that business sold on behalf of the seller. But I do work with buyers to help paint that picture and understand what do they need to do to be successful in the business post-close.
Very cool. So I want to take a step back. You mentioned that about 20 years ago, you bought your first, I believe it was a single family home. Is that correct? Yeah. I remember talking to you about that previously, but do you think you were under the same mindset that you are now, looking for income generating portfolio? Is that why you got into real estate?
So Charlie, I had the dream of retiring by 35. So I read it in my early 20s. I was reading Robert Kiyosaki, Rich Dad, Poor Dad, Susie Orman, plethora of books that were out there, real estate investing. And I had this grand plan to put together a portfolio that was going to 100% replace my income from corporate. And so went down that pathway. I didn't have mentorship, so always advise the audience. It's much better, especially if you're getting into a new space, to have a team of mentors and coaches who are experts in their space. I got connected with some folks that were not experts in the space. But at that point in time, that was the goal. Wanted to be able to retire my parents, and wanted to be able to focus on doing impactful work and letting the portfolio work for me. That was the overall approach. But I got into the market at the height of the market. I've gone through several cycles now over the past 20 years and have a much better understanding for cyclicality that exists in our space. But I made 2, 3, 4 real estate investments over the course of about 18 to 24 months in 2005 and 2006. And so all of us know what happened not too long after that. And so, went in, was over leveraged and overexposed, but I learned a ton about deals and how do you do deals and when do you do deals and who do you need on your team to get good deals done. So very, very thankful for having had that experience very early on in my investment journey.
Yeah, and I don't love that story because it didn't benefit you monetarily, but what I think you got out of it, Jason, was the fact that even though maybe some people would see that as a failure, you saw that as a learning experience, and you were able to say, it got me back, but it didn't get me down. It didn't stop you from, keeping on. And so tried to take everything, my failures as learning experiences. Sounds like you did the same with that. And unfortunately, that was not a great time to buy. I know a lot of places here in Nashville, dropped 50% and anywhere from 30 to 50%. And then around the nation, depending on where you were, anywhere from 30 to 70, 80%. So what do you think that that taught you? I know you kind of talked about it, but what do you think that taught you? How do you think those failures, I'll call them, helped you from the M&A space?
So I'll challenge the description of failure. I honestly believe it's all learning.
Yeah, agree.
And we're in the business of risk reward in general, right? That's the nature of capitalism, right? You got to step out there. Now there are ways to take better risks, and again, with more experience. And I don't necessarily believe my takeaway is you don't have to learn through your own experience. There's opportunities to learn through the experience of others, and that's the mentorship piece and the coaching. Getting connected with folks that can see, right? I now know we go through cycles. There's ups and downs. When the market's really hot is not when you go, quadruple down on your investment. So there's some very tactical pieces, but the key insight is who's in the space that understands what your objectives are, that understands how the market operates, and that can give you good advice on when should you invest, how much should you invest, is really, really important. And vice versa, if you have someone who's not very good. I had an advisor who just was not the best advisor. So even selecting the people who are around you. And so I'll drop Marcus Ogden, who's a business coach of mine, who pushes me to continue to look at things in new ways and to stretch and to grow. I naturally have a growth mindset.
Yep.
And so that's where I'm always pushing. But this concept of risk and risk management and understanding how to assess risk and how to come together or come up with a plan around an investment that takes risk into account, looking at what's your base case outcome from even from an M&A perspective. What's your base case outcome? And having a plan for what happens if it all goes wrong. Like what's the worst that could happen, and making sure that you've thought through and understand how to navigate that. And then also, if it goes really, really well, what do you do in that scenario? So my takeaway was coming up with a plan for addressing all three: what your expected case is, what your downside would be, and how do you mitigate that, and what your upside could potentially be, and how do you take advantage of that.
I love that. And you brought up mentorship a few times and coaching. I'm a huge proponent in that of mentorship, of coaching. Sometimes you got to pay someone to do something, but the way I see it is you're saving a lot of time, trouble. And you had a phenomenal point, Jason, of it doesn't have to be your failure. It could be someone else's, and learning from that. And I think a lot of times coaches, mentors, they've been doing it longer. And so, maybe they don't have a ton of failures, but if they're coaching, if they're mentoring others, they can see a lot of those failures and kind of, tell you about maybe not even their failure, but someone else's failure. And so I think not only are they helpful with kind of holding your hand, getting you to where you want to be, but they can give you a lot of pitfalls that they've seen in the market, in the M&A space, whatever that is. And so I am a huge proponent of mentorship. You mentioned Marcus. Marcus is a phenomenal business coach that I'm with as well. He introduced us, and so I've seen what I've gotten from that has been nothing but phenomenal coaching over the last 6-9 months or so. And so I love the mentorship aspect. So you've been extremely successful in the M&A space. Previously at the corporation and now with your own firm. Why do you think that the real estate aspect of M&As is so important?
So there's a couple different elements to it. And one is real estate is an asset that holds value, right? So there's limited supply of it. It de-risks deals for 3 reasons. One is, if you're a business owner, and I know the audience will appreciate the fact that if you don't have to pay someone else rent, that is very, very valuable to you. So we're looking at cash flow and income stream. Not having to pay rent is one big reason to look at getting into real estate or to picking up real estate if you're a business owner. And so that leads to the banks. The banks, when you have a service-based business, for instance, banks see a lot of risk in that. If it goes wrong and they put a lot of money into it, what's their collateral? So they then look to the individual borrower for whatever collateral they can bring to the table. When you have real estate involved, the bank gets much more excited about lending against that. They have hard collateral that they can use to secure the loan, and that's going to get better terms in terms of interest rates, longer repayment period. So we won't get into the math, but the cash on cash returns of a business deal that doesn't have real estate versus a business deal that does have real estate, it's a lot more attractive when the real estate is involved. It's less risky. So if the business fails, you still have an asset there that you can, you as the owner, not even for the bank, but you as the owner can figure out how to monetize. And that leads to the third point, which is expansion. So if you own the real estate and let's say you have a retail location and business is going really well, it's a lot easier than to expand your current operations. Or you can look at adding additional sources of income. So you can rent out unused space. It gives you a whiteboard to play with on looking at how you can grow and deploy capital to continue to generate more and more income. So how can you utilize that asset more effectively? And so those are 3 big reasons why real estate involved in the business deal are really good for the business itself in terms of allowing it to grow, and are great for whomever owns that business, not having to pay somebody else's rent having a hard asset that you can borrow against, and then having room to continue to grow and develop new income streams.
Wow. Okay. This is super fascinating to me. Again, brand new to me. So just want to highlight those three and make sure I understand it correctly. So if there's two businesses, one has real estate with it, one does not, let's say it's the exact same business, a bank is going to give the one with real estate better terms, maybe a longer payment period, lower interest rate, just due to the fact that there's real estate involved, because now they're not having to pay rent. That was the first point. Second one, there's banks see less risk in the real estate portion as opposed to non-real estate. And then the third is just expansion. And that could be in the form of maybe the business needs to grow and there's already the land there or the office there, or could possibly rent out the unused space and so bring in some income. Did I sum that up in my not very smart brain?
You got it. And
Awesome.
Charlie, really, there's two directions we come at this, right? And so for this audience, my assumption is that most of the portfolio is starting off as real estate, right? So single family, multifamily, maybe some development, light manufacturing, whatever, right? But there's income stream is rent. And so the question is, can we broaden? And this conversation is great because it maybe opens the audience's eyes to some other options and opportunities of this hybrid model. And there are already some that exist. So storage or self-storage units are little mini businesses, right? But rent. RV parks, kind of moving further along. Laundromats, car washes are starting to move closer to business operating entities tied into real estate. But there's some of these that are true hybrids where the real estate is integral. It's a really important part of the business operations. And oftentimes we see those two linked. And so there's kind of how you take your real estate portfolio and migrate that to something that also includes these elements that have business. And I think the importance of that is, if you know, say, marketing really well, or you know sales, you had a previous career in that, there are a lot of business owners that don't do marketing and don't do sales. And your ability to increase top line revenue is pretty significant. And it can outperform, say, what you can do in terms of rent increases, which may be driven more by the macro factors of your, the factors that are tied to your geography. So there may be some opportunities to add some portions of your portfolio where your unique skills and capabilities can get you outsized returns, right? So everybody can raise rent, right? That's not necessarily a special skill set. Not everybody can grow a business.
Right.
Not everybody can market in a business. So that's one aspect where you take the real estate portfolio and you're able to get bigger returns out of that portfolio by looking at adding these business components. And I always suggest that if you have no clue about business and you've never done business before, then going at it alone doesn't make sense, right? But if you've got a skill set and a capability and you've worked in business, you know leadership, so you can build teams, that might be an option and opportunity. So it goes both ways. So we've got business owners that pull in real estate to make the deal more attractive. And then for those who own a real estate portfolio, there's an option and opportunity to look at how do we get more out of that portfolio by looking at adding pieces and components, and with whatever level of complexity you're comfortable with, that can maybe improve the returns on that portfolio.
Man, that's amazing. And so that kind of goes back to something you said towards the beginning of valuation, marketing, and vision. I think of in the multifamily space, Jason, when we're looking at an apartment complex, we go in there and we say, okay, what amenities do we have versus the comps, right? The comparables in the market, and maybe they have a playground, a grill, picnic area, and a gate, and ours just has a dog park. And so how can we bring more value to our customers, which are the residents? Yep. And we kind of come up with that business plan with our vision. It sounds like from what you're saying, you do the same thing on the M&A space, maybe of, hey, it's not just raising the price of a product or the service. It that could be it, but it's also other things of how can you get additional income? How can you reduce expenses? Am I understanding that correctly?
Absolutely. And I'll give an example that illustrates that point. I had a buyer look at a laundromat, And through conversations, laundromats usually, right, they're in a populated area, not very many employees, right, equipment that you have to maintain and keep up. But it's tied to people coming in and however frequently they wash their clothes, right? So you look at population density, and that's a big driver for what you think the cash flow of that business is going to be. A lot of people around in a high apartment, in an apartment building, you're going to get more usage than if you have single family homes that are spread out, right? I had someone that suggested or had gone and looked at getting commercial contracts. So in the middle of the night, oftentimes laundromats are empty and the machines are sitting idle. And so this person had looked at going out and working with local, whether it be restaurants or event centers or other businesses that would need laundering services.
Wow.
And hired a team to run those machines between 12 and 8
Wow.
and generate a whole new income stream to keep those machines utilized. And so it's that type of creative thinking of, the previous owner's running it a certain way, it leads to a certain value. What can I do differently? What can I add? What new amenity can I add? What new feature can I add that everyone else isn't doing or that's absent in the local market to create more value? And so that to me was mind blowing in terms of how do you go from 30% utilization to 70 or 80% utilization and turn that into additional cash and income for an investor.
Man, that's awesome. That's very, very cool. I love that story. Thank you for the example, because I think we all learn better from stories and examples as opposed to just data and stuff like that. So I really appreciate you going over that. That's really cool how they, and I think we try to do that too in the multifamily space. We try to do something that the previous owners didn't do. And you got to add value. And it sounds like in the laundromat, the value was, hey, maybe the restaurant's paying a little bit more, but now they have a lot more time back, or it's done for them, right? So it's delivered to them, whatever that may be. There's a huge value in that. And so I think that's what we're trying to accomplish too on the apartment side of things, Jason, is how can we add value to our apartments? Jason, I know you kind of touched on this with the banks when we were talking about the deals being a little bit less risky of a M&A. Why do you think banks find real estate so attractive?
Well, and so the reduction in risk, Charlie, is really the combination of the two. So if you had a pure real estate deal, you would have a certain risk profile that's already well established. And in your space, right, it's clear. Everyone kind of has a sense as to what's the criteria that banks are looking for in terms of real estate. And then on the business side, the challenge in several businesses or several industries are there's no hard assets. So if you look at a manufacturing business, it's a different profile, and bringing it down a level. If you look at a business that has valuable hard assets, a bank gets more excited about it. The bank just wants to be able to know that they're going to get their money back.
Yeah.
Right. And so with real estate, there's always going to be demand because there's limited supply. We're not making any more land. And so there's always going to be some intrinsic value in real estate. And that's a fundamental underpinning of why it's less risky to have real estate versus if I have a business that's just delivering a service. If that business goes away, the bank has loaned on that and the bank doesn't have a way to recoup it. And so they're taking our deposits right now, SVB, and we've got lots of stuff going on in the banking industry. And so the bank is a fiduciary that has to make sure that they're doing their diligence and they're not overextending themselves because it is the money of their depositors that they're deploying. That's the capital that they have to use. And so it's just a risk profile of if something happens, it's that same, what's my base case, what's my downside case, and what's my upside case. And so the bank says, okay, if you have nothing else and you fail and you owe me X number of dollars, what's my recourse? How do I get the money back? And so you may have a personal guarantee that's in place. That's when they ask for potentially personal assets to collateralize the loan. Whereas if you have real estate, again, I got my license here in Texas, the bank knows that they can then take that real estate and go back to the market and sell it. And so oftentimes there's an appraisal done. And so the bank knows, okay, here's fair market value for this piece of real estate. And if this person cannot make the payments, then they have a way to recoup their investment. So they're doing the same analysis, Charlie, that we are on the business side of, I want to make sure that they're, are in the banker's shoes. I want to make sure that this makes sense and the base case is a likely case. If it goes wrong, here's what I'm going to do. Here's how I make sure I can get back the investment. And in the upside case, they want to see that because then they can lend you more money. But I think fundamentally, it's a risk management approach that the bank is using that we should all use in our investments as we're going through. Is we should be thinking about the same things that a bank is thinking about in making that investment decision.
Yeah, I love that, and I think when something I talk about a lot is the leverage side of things. I know. Most people have bought a single family home and when you put down, if the home is $100,000, you're not putting $100,000 down, right? You're going to the bank or some type of lender. And banks, lenders, financial institutions see real estate as a quote unquote safe investment or safe investment for them. Doesn't have to be an investment property. And a lot of times, like you said, Jason, they're not making any more land unless you're in Dubai and building some of those islands. But besides that, they're not really making any more land. It is, there's insurance on top of that, right? So if something happens to the property, insurance is going to cover a lot of it, maybe all of it, but probably most of it. And then, if there's no insurance, if there's nothing, at the end of the day, you still have the land, right? Kind of worst case. And so I see what you're talking about and would just kind of add on that leverage is something we're all familiar with. If maybe we don't know the term, we're all familiar with it if we bought a home or know anyone that's bought a home. And so I think what you said, Jason, it just is banks see real estate just in general as being an attractive investment for them. And so when there's a business that's bought or sold, that there's a real estate component with it, then as you have said many times, less risk for the bank. So they're able to be a little more flexible with their terms. Switching gears a little bit to your business, to your firm, what are the company goals over the next few years for PGP?
Yeah, so we want to continue to expand and be able to serve more business owners and investors, not only here in Texas but around the country. And so that's core. So we want to do more deals, and good deals for good people is one of our charters, and be able to expand our ability to do that over several years. Longer term, Charlie, there's a view to some of these concepts of how do you get deeper into preparing a business for sale. Let's say, for instance, the business is highly dependent upon the owner and they need someone to come in and help them put a team in place, help them formalize processes. We'd like to build out more of those capabilities in the long run. We talk about buyers coming in and looking at what are the growth opportunities that they see and they're trying to execute on. And so we'd like to be able to help buyers on that side post transaction to realize all of their value creation objectives. And so longer term, we'd like to put those in place in addition to the core services we offer today, which are business valuations and then facilitating the sale process. So we have a geographical expansion view, and then we also want to be able to add broader services. The goal is really, how do we help more people become successful? So like I mentioned earlier, this is creating income streams, creating portfolios, building wealth. I have a personal mission around generational wealth and creating access to folks and communities and individuals who maybe haven't had that. And so love to have these conversations where if hopefully no one's in a position where they are not able to make the right moves because they're not aware, right? Because they don't have the information. Right. We've got so much technology today. How do we get 25-year-old Jason the information on how do you make the right moves? How do we get the right people connected? Again, I just come from a growth mindset that there's enough for everybody to succeed. Yeah. And everybody deserves their own little portfolio. Whatever goes in there, they have the ability to determine and define. But let's get all the information that we can and help people to connect the dots as best we can in the seats that we sit in for long-term success and growth and wealth creation for everyone who's interested.
I love that. So the next kind of plan is the geography. More offices, I'm assuming, or is it just more areas that you service, or both?
More areas in service. So it's really a customer-based approach. So it's
Okay.
where are there businesses and owners that can benefit from the service?
Okay.
And then how do we leverage whatever we need to leverage? The interesting thing is I'm sitting in an office today, but I've got folks that I work with that are around the country. How do we leverage technology to be able to create the level of service that we like to create and service whoever needs the service wherever they are? So we're not geographically tied or tethered. And so that's a piece of what I spend time thinking about is, generative AI. How do we use generative AI to be able to service customers better? But for us, it really starts with our clients, what our clients needs, and how do we meet our clients where they are, physically, where they are mindset wise, where they are in the journey with their businesses or their real estate portfolio, and help them get to their overall objectives.
Very cool. And then the second part about the expansion is just broader services. And so I'm going to use your analogy about the laundromat, but right now, I think you said that you primarily just do the valuation, a little bit of the marketing, the vision, but you're looking at offering other services. Maybe what you mentioned was, if a business is extremely reliant on the owner, the current staff, and maybe the owner wants to retire, you need to figure out how to get the business running or continue running without the owner. And so you may have some services that kind of like best practices and how to scale.
Well, and it's consulting. So, and I started off doing consulting before the transaction side.
Okay.
But that's where the value is. So the concept, Charlie, is there's value to be created in a business. And so that's part of what we do. We go in and we say, okay, this is just like you would do in multifamily. This is what can be done. Now, there are two people that could do that. The first is the existing owner, or the second is the new owner. And so I always tell my clients on the sell side that if you capture the value, if you do it, if you implement and execute on it, when you go to sell it, somebody's going to pay you for that. Now, people aren't going to pay you for the possibility or the chance to do it. And so if you don't do it, a buyer will come in and do it, but they're going to pay you less because they're going to invest their time and resources to deliver on it. And so whether that be on you just bought a business and now you're in the driver's seat and you want to execute on plans to grow and scale the business, or whether you're in the seat today and you're thinking you want to exit at some point in the future and you need some help, so you capture most of that value. We'd like to be in a position in the future to be able to support and service either one of those types of clients. And it's really about unlocking the value. The value is there. We got to figure out how to get it unlocked. 98% of businesses are small businesses. And again, just at the macro level, what does it look like if everyone is working on fully unlocking the potential of the businesses that we have within our economy? I think there's just a lot of potential for us as a society, for us as a world, if we're all pulling in that direction.
Yeah, totally agree. How do you think your current profession, being in M&A, has helped with the real estate side of the business? I know you're a licensed realtor. I know you've done some investments as well into real estate. How do you think the M&A side has helped just with real estate?
Yeah, so, and I think broadly, Charlie, all the things that I'm talking about are on my roadmap in terms of building out the portfolio. And I don't think I'm exempt from being in the pool of people. And so this journey has really helped me to clarify this intersection of business and real estate. And so I've got a skill set around doing deals. I've got a skill set around looking at businesses and understanding what do we need to do to get them to operate more effectively. And I've got an understanding of real estate transactions and potential. And so as I continue to build out my portfolio, that's going to be key in how I develop it. So just like I would advise anyone else, how do you use what you're really good at to build out a portfolio that helps you accomplish what you want to accomplish? So I have personal goals around retiring my wife in several years. I've got personal goals around personal retirement and creating legacy wealth for my children. And so again, all of those pieces are tied into how do I leverage this platform and where I sit today as I'm helping others. How do I also participate in my own personal portfolio? And so I take the same approach that I'm sharing here in thinking about building out what I do on the personal side.
That's awesome. I know you had mentioned some of the kind of where M&A meets real estate, some like a laundromat, car wash, forget what else you said, but do you work with those businesses often?
So I work with every business.
Okay.
And here's the deal, Charlie. And so this is kind of the tidbit, and even why I'm hoping this stretches the thinking. I get requests all the time for car washes, laundromats, self-storage, right? Those aren't hidden secrets anymore. A lot of times it's for folks that are looking for more passive investments, right? Yeah. Investors for more passive investments that have a different profile. So trying to diversify the portfolio. I don't see a lot of those coming across. And when they do, they don't stay very long. They sell at a premium. So there's those pieces there. The question is, what's the next level or tranche of businesses that make sense, and or people and investors looking at their own inventory, self-inventory of what they're good at, and then having the conversation with an advisor like myself as to what businesses might make sense. So I've got a variety of businesses. There's also hierarchy of businesses. You've got businesses that are where really the owner is self-employed. And so they don't have infrastructure. They own all the relationships. They're doing everything. Yeah. Very hard to transfer, right? And so again, the coaching happens on that side. But for this audience, if you're looking at a business and the business is 100% dependent upon the owner, then you've got to be very thoughtful of how you mitigate that risk. You know, how do you make sure that when you get in that business, the cash flow will continue? And then you have businesses that have general managers in place. You have businesses that are fully operational, and that maybe what they need is strategic guidance. So they need a chairman of the board, chairwoman of the board to set direction, who understands the macro, economics of what's going on in the world, and who can say, okay, we need to be pointed in this direction, but they don't have to be working in the day-to-day. And so there's a variety of businesses. I work across all different types of businesses that fit different types of profiles. And the key is really for an individual buyer to say, what makes sense for me and where can I play and be successful? And in general, you'd want something, especially if you're looking for it being more passive, that has a fully built out team that has already diversified customer base, right? So one customer leaves, the business survives. There's a lot of different kind of principles in there that would make a good business. But for this audience, I would just say, do the diligence as you're looking at it and assess what would make sense for you personally. And that's the thing about business. I think they're far more unique. And so a given business, whether it's good or bad or not good or not bad, can be a very different answer depending on who's asking the question, who's the potential buyer of that business.
Man, that's awesome. Jason, I've learned so much today. I definitely appreciate you being on here. Want to go to the last few questions about just in closing. Do you have a recent book that you've read that really stands out, real estate, business, self-help?
Yeah, so I recently read Can't Hurt Me by David Goggins.
Love that book.
Navy SEAL. It puts things into perspective around mental toughness, around fortitude. And so I'm an entrepreneur, right? I launched the firm, building the firm. And so again, I understand and can identify with business owners. It's not easy. And having the right mindset, having the mental fortitude to push through when you don't want to, when it doesn't feel good. It's been hugely inspirational to see what David went through his experience, what he's learned from that experience, and how he applies that, how he took Navy SEAL training and applied it to ultra marathon running and a vast number of other endeavors, but would definitely recommend that book for anyone who is looking for just something to harden one's mind, to callous the mind, I think is one of the terms he uses in the book, to be able to fight the fight. This is not a sprint. None of this is a sprint. It's a journey that requires stick-to-itness, that requires a level of toughness and grit and fortitude to make it to the finish line.
Man, I love that book. I listened to it when I walked, and need to, for Christmas, I got Never Finished, which is his new book. Haven't read it yet, but man, David Goggins is a beast of beasts. The really, I think what I got out of it, Jason, was the mindset and get tough. It's not easy. I mean, he went through Navy SEAL training 3 times and made it, and ultra marathons. I don't know. It's hard for me to do a walking 5K, let alone 100 miler in the desert. But anyway, yeah, that's a phenomenal book. What can people expect to see from you and your business over the next few years? I know we touched on that a little bit, but anything else you wanted to add to that?
No, the bread and butter really will be around getting transactions done. We're seeing a lot of baby boomers retiring, and so a lot of opportunities in the marketplace to get a business. And there's this technology piece that is just interesting as to what you can do to leverage technology. They'll never replace the personal relationships and interactions, but you take real estate, technology, and a business, and what does it look like to do a great deal where an owner is happy, they're able to secure their future, and a new owner is able to come in and sit in the seat and take that business to the next level. Yeah. And so our goal is to do more of those deals, and to be able to support a variety of business owners that are ready to go through that transition.
Man, that's awesome. I'm pumped for you and your company. I know there's a lot of people retiring, a lot of opportunity out there, both in the M&A space, small businesses, but then also real estate. A lot of mom and pops that are been doing this a while. They're looking to get out, and so I think it's a very, very similar path. There's a lot of value that can be added, can be created if you have the vision, if you have the team in place, and I know you guys definitely do. I love that. There's a lot in your future.
I appreciate it.
Yeah. All right. So how can people reach out to you?
Absolutely. So our website is PGP, like Paul George Paul, Advisory, ADVISORY.com. PGPadvisory.com is our website. My email is jason@pgpadvisory.com. And telephone number is 210-580-4178. Feel free to reach out if you have questions, thoughts. If you found something to be interesting in this, you wanted to learn a little bit more, I'll always take a phone call. I just like to help people. That's one of my core values and core goals. And so feel free to reach out if you have questions, if you have thoughts, regardless of where you are in that journey. If you're an investor or a business owner, thinking about investing or thinking about becoming a business owner, happy to sit down and talk.
Man, yeah. I don't know if anyone's given out their phone number yet, but I'll make sure to put all that in the show notes. I know we're connected on LinkedIn, so I'll add your LinkedIn on there as well. And then is there Instagram, Twitter, anything like that, or should I skip that?
So if you can add those to the show notes, there's Facebook, there's Instagram, there's Twitter. Feel free to follow, and whatever your platform of choice is. Again, we try to meet our clients where they're at in their journey. So we are. I haven't made it to TikTok yet. That's maybe I'll put that in the 3 to 5 year plan.
Yeah. All right. Well, Jason, thank you so much for being here. It was phenomenal to talk to you, learn about kind of your business, see the similarities, the correlations between multifamily, what I do, and the M&A side, what you do. And I love your perspective from being an investor, real estate agent, and just this corporate M&A background that you have. And I really appreciate that. So thank you so much for being here.
Charlie, it's been an absolute pleasure and honor to be here with you and your audience. Love the conversation. I've learned a ton as well. And I think that's part of why we do what we do, is to help kind of push the thinking, continuously forward. So always moving forward. Thank you so much for the opportunity. I look forward to doing it again soon.
Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.